So let's begin this hour, guys, with where we are and how we got here. Signs of trouble for FTX began when CoinDesk first reported a leaked balance sheet of Sam Bankman-Fried's Alameda research trading firm. Now, that showed it was heavily dependent on FTX's native token, FTT. A few days later, Bankman-Fried reassured customers in a now deleted tweet that FTX and its assets were just fine. But one day after that, Binance announced its intent to buy FTX because of a liquidity crunch. Now, that was last Tuesday. The decision, as we know now, was short-lived. Later in the week, Binance said it was walking away from the FTX deal, leading to FTX filing for bankruptcy in the U.S. That was on November 11th. Now, given the turn of events with FTX, Binance's CEO has now announced in a tweet that the crypto exchange will help, in his words, reduce further cascading negative effects of FTX and form an industry recovery fund. As for FTX, police in the Bahamas, where the company is headquarters, has said they are working with the country's securities regulator to investigate FTX for criminal misconduct. A person familiar with the matter has confirmed to Yahoo Finance that the law enforcement there are forcing Sam Bankman-Fried to stay in the Bahamas as of Saturday night. And Brian and Brad, that's kind of where things are right now. You know, in many ways, when you look back to where things were a week ago, this, you know, for all the talk about the technology and where crypto is, this kind of played out like a traditional bank run. And we had a major player in the space collapse in a significant way. And then since then, we have seen this contagion effect where so many exchanges have come out and said, we are not the same as FTX, even as customers have gone in and started to withdraw funds.
You talk about just weeks ago, we think back to over the summer as well, even as there was this crypto washout or the emergence of the crypto winter that was solidifying itself. We had been looking at Sam Bankman-Fried as almost a savior to some of the other crypto companies, looking at how he could make sure that they were getting some type of float that they would need necessary in order to just get through this crypto winter. Now there's larger questions of if there was some type of wrongdoing and even how he was looking to drum up or write up what could be the future of the boundaries and the stakes for the law in crypto as well, as he was working with SEC Chair Gary Gensler on that. Larger question on where the tires are going to be kicked on that and the type of scrutiny that we could see come forward. But this was a far different story over the course of the summer for Sam Bankman-Fried. But the fact that FTX was only looked at by Binance for less than 24 hours almost says everything that you need to know about how much wrongdoing had perhaps persisted for whatever the extent of time was. But Binance quickly stepping away. CZ also doing an Ask Me Anything today about this too.
I would say he's really rubbing in here, Brad. But the theme all morning long, really, as we were talking about in the 9 o'clock hour, is this trust. What reestablishes trust inside the crypto industry? What do we need to see? A lot of folks that we've been talking to suggest some form of regulation will help reestablish that trust. But Akiko, regulation, as we all know, does not happen overnight, which raises the question, what rebuilds that trust and what gets prices ultimately headed higher?
Absolutely.
Yeah, I mean, as you pointed out, Brian, it really is sort of a crisis in confidence right now that's playing out. And that's why you've got so many CEOs in the crypto space coming out and saying, here's where a balance sheet looks like. Here's some more transparency, because if you are a holder in crypto, you're wondering what's the next domino to fall.